Hello and welcome to The Trade. Let's get straight into the technicals and see what the charts are telling us with Ilya Spivak from Tasty Live, who joins me now. Ilya, great to see you. Gold having another moment.
Yes, indeed. So we talked about this last week, and the idea that gold has been something of a tell in these markets. It sat through July's rise in real rates suspiciously without weakness. And the dollar, as we'll see in just a moment, echoed that move. And of course, as soon as real rates stopped rising come August, it sprang sharply higher. That was thanks to a batch of kind of weak, tilted U.S. economic data that has started to dilute Fed rate hike expectations. We're still looking for at least one hike coming up. Of course, the big question will be whether the markets think Kevin Warsh endorses it here as he speaks at Jackson Hole to close out the week. But the bias for gold seems to be still pointed higher, and what that is maybe a signal for other markets.
And a signal indeed in terms of what we're going to be seeing more broadly for risk appetite. What about what we're seeing with currencies? The Aussie dollar, as somebody who's going overseas soon, Ilya, I'm quite liking where it is. Do you think it's going to continue to rise?
Well, so we said last week when it was breaking higher that it had room to keep going and hit 72, and it's done that. It looks like, I think, there's more to go here because, of course, much like other major currencies against the greenback, the Aussie was impressively resilient through July. And, of course, the flip side of that was the dollar was impressively weak. And that sort of echoes what gold told us. When real rates on the U.S. dollar surged, you'd think, oh, this is better yield. People should want to own that. They pointedly sold it. And not just against the Aussie, but against the euro, the pound, and on it goes. If we get this sense that these markets are telling us, hold on, the Fed is not going to be as hawkish as everybody thinks, and Warsh tips his hand in that direction, we might very well be heading into the vicinity of 73, those highs from May, as a next step.
The bond market is always the one to watch, though. What is the long end of the curve telling us, Ilya?
Well, this is where things get really exciting because gold and the dollar seem to have made a move that the bonds are lagging behind. They, of course, have been selling off relentlessly all year because the markets concluded that the war in Iran was going to be an inflation shock. And since then, since late February, early March, they've been fading all of what they thought was going to be a round of rate cuts, flipping that into rate hikes. But now as we look at these dynamics, they start to look a little different. Notice the last bounces in the bonds where the markets conclude, oh, well, maybe we're going to get a ceasefire. Maybe this memorandum of understanding is going to be something. There is a bounce in the bonds from March into April. There's another one in May going into June. They're all very quick responses. A quick bounce, then a quick sell-off, speaking to a market that's headline driven. Now, since basically the end of July going into August, the market is kind of going sideways. And that's not comporting with crude oil, which has rallied for the most part in August. So the market is looking at something else. And as you consider, well, Warsh is speaking at a Jackson Hole symposium focused on financial innovation. What kind of landed him this gig is the argument that AI was going to be disinflationary because it was going to bring all this efficiency, and that rates can be structurally lower downwind. He's also apparently very allergic to forward guidance. Now, the markets think he's going to basically endorse market pricing for at least one hike by December. But if he comes out and basically says, let me tell you about the wondrous parts of AI for long-term inflation suppression, well, then that's going to read dovish, which is exactly what gold and the dollar have already signaled. And so there's room here for bonds having coiled up into a rally. And that's something the markets haven't really played out yet. Now, of course, the caveat is if it's for the wrong reasons, stocks aren't going to like it.
Indeed. All right, Ilya, always great to chat. Have a great weekend when you get there. Ilya Spivak there from Tasty Live. That does it for this edition of The Trade. Be sure to join us next time.